Now, so we want to see how firms purchase this stock, how they control and manage them. Now, if we have, just follow my illustration, please. If we have a company and they have different departments. Now, I'm talking about the purchase. How do firms purchase? If they have different departments, and each of these departments might need some items they want. Okay? So each of the departments, let's say the sales or the maintenance or the service department, might need an item there. What they do is to make what we call requisition. You request that, okay, in the maintenance department, we'll need electrical equipment. The second one, we'll need plier. We'll need different items. They make requests, each of the departments. And it is important that an individual in those departments makes this request so that they don't have double requests. Now, once each of the department makes requests, they send it to the purchasing officer. In some firms, they call them the procurement officer. Okay? They send it to the purchasing officer. Now, the purchasing officer is that individual that is in charge to make purchase. Now, he makes purchase based on the request made by each of these departments. Okay? Because it is what they want, that is what the company will have to definitely buy. Now, this purchasing officer will now have to call on suppliers to make tenders and bring quotations. Like, okay, bring, for instance, if after they've given him the requisition, so definitely those people that supplies, that sells most of these things they need, so they will have to now, you will have to now tell them, invite them to bring quotation for each of these items. Now, in some firms, the purchasing officer going through different suppliers, quotation and tender they've submitted, he has the authority to give a particular person a contract to supply to them. But in some bigger firms, based on the fact that they might feel that it might be biased, in order to also ensure effective internal control, they might have another board that is in charge of approving. For instance, once they invite, company A comes, company B, company C. Once they come and say, okay, I supply, let me use electrical equipment for instance. Because I supply electrical equipment, this one. Now they will make their price and several items that comprise of the cost and send it. So in some firms that are not big, the purchasing officer can now say, okay, B, supply to us. But most times, they do not allow the purchasing officer to give authorization for the supply. Because if I feel that since he's the one in charge of collecting this requisition and inviting this, he might want to send that to his family or somebody that is closer to him. So they might have a board, that's a bigger organization, that is in charge of giving authorization on each of these suppliers. Okay? So definitely, once they give authorization, now they give them, okay, supply to us this item that is needed and other necessary documents. Now, once they supply to them, this product will have to go through different check, inspection, receiving, and all of that. Okay, so that is talking about the purchase of the item. So also, once the item comes into the company, there is what we call stores. I think that's where I was coming from. The stores department. The stores department. Now let's write. Let's write. So like what I've said, the purchasing comprises of when each of the departments makes requests and send to the purchasing officer. And the purchasing officer in turn invites suppliers to submit tender and quotation for the products in stock, and which they give authorization for them to supply. Okay. Now, once this item comes, it is sent to the stores department. The stores department. Now, what's the store department? I think we'll start from there. Now let's write. The store department is a department in an organization in charge of stock and inventory. Its handling, inspection, distribution, etc. Are you there? Good stuff. So what it means is that once these goods they supply, the supplier wants the supply. So firms, they have what we call the store department. And the store department is that department that is in charge of this inventory. They handle, they inspect. And one of the things they have to do is to inspect to ensure that what was requested is what was supplied. Do you understand me? What was requested? Because most times, we might request some item, a particular quantity, color, type. And most times, suppliers might supply something else. So it is the function of this department to ensure that what was requested is in equilibrium with what was supplied in terms of its type, color, quantity, and so on. Okay, so the store department is in charge of that. So that's the department in organization in charge of that inventory. Now let's write. The store department has three fundamental activities, which are A, receiving, and C, issuing. A, receiving, storage, and what? Issuing. Now these three are the basic fundamental activity of the store department. Other firms might want to incorporate different functions, but these three are the major in the sense that, like I said, once the supplier brings the goods, they are the ones in charge of what's receiving it. And they also will store them to ensure that they are void of pilfering. Pilfering, that is so that those working in the organization will not steal from the items. Okay? And also issuing to the departments that needs those items that was requested. And these are the three fundamental activities. Now the store department also has three types, in the sense that since they have three activities, they also have different types of store departments. Now let's write. The following are the types of the store's organization or department which are in use. A, we have the central stores. B, we have central stores with sub-stores. We have independent stores. Now let me explain this. Now these are the three types of the stores department in every organization. Now the first one is a central store. And what this means is that all the departments or the company has just one centralized department that receives and handles stock. That receives and handles. Like I said, the store department, it means in this organization, they might have just a store department. And this store department is the one that does this, receive, handles, and sends to other departments. Okay? That is central. It means it is only this department that is in charge, that has what? A centralized authority to receive stock, handle them, store them, and also want to issue them out. Now, why the second one is central stores with sub-stores. Central stores with sub-stores. And what it means is that in an organization, they can have a single department. This is undistracted. They can have a single department that receives it, but other smaller departments that handles them. Centralized, for instance, this can be the centralized store that receives them, but now sends it to their sub-stores that handles them and give to their department the quantity they need. That is central stores with some. While the third one is independent stores. And what it means is that each department receives their stores and use. They don't have the central. For instance, if they have a sales department, maintenance department, they have request what they need, they receive them, and they handle them themselves. So these are the three basic types of stores department. Somebody right. That's the impress stores. Impress. Impress store. Now, let me use an illustration. Let's say, for instance, you have a trader that is given 50,000 every month. Okay? And that's probably at the beginning of the month. And probably at the end of the month, they've used 40,000. That was the expenses. What will be the balance? 10,000. So in the next month, they will have to reimburse 40,000 to be used to make it 50,000 back. Okay? So it's a specific amount that is given for expenses such that it is being reimbursed. That particular expenses amount that was used the next month. The same way we have interest for cash, that's the way we have for stock. It's still the same ideology. Interest stores comprise of a situation whereby you're giving a particular quantity of stock, such that once you issue a number of quantity, in the next month you are being reissued that particular quantity that was issued out. For instance, if they give out, they give the interest 50,000 carton of indomie, 50 carton of indomie, 50,000, and before the end of the month, 40,000 or 45,000 was issued out. What will be the balance? Huh? 5,000. So it means that the next month you have to give back the quantity that was issued out for 5,000 to make the interest still come back to 50,000. So that is what the interest stores. Yes. The interest stores ensures that a certain quantity of stock is made available at the beginning of a certain period to the storekeeper in charge. At the end of the period, the storekeeper ascertains the quantity issued and the balance, and then request for the exact quantity issued to make up the interest. So that is interest. So hope you understand my explanation. That the interest store comprises of a solution whereby the storekeeper is given a particular amount of stock, such that when he uses a particular amount, at the end of the period, he gets the balance and request for that quantity that was what? Used in order to come back to his interest. Okay? So that is the interest store. Now, like I said, one of the important aspects of a firm is their stock. Because, like I said at the beginning, if they don't have stock, they can't sell, they will not have customer. And if they don't have customer, they will not have income. Right? So, most time, the firm try as much as possible to ensure that they safeguard their stock. Because even workers working there might want to steal some of the things that are being used there. And some might also be obsolete if they don't check it. Okay? Now, so one of the things they do is to ensure that their stock is up to date, it is safeguarded. So they devise a means to ensure that one, they don't run out of stock. Because if they run out of stock, they will not sell. And if they don't sell, they will not have income. Right? And also, to also ensure that they don't tie their money in unwanted stock. Because you might end up buying more than required and store them. One, it might lead to pilfering, like I said, for instance, or they might get spoiled. Especially when you are dealing with perishable items. Let's say you are selling tomatoes and you have to check your demand, know the demand for each time, and know what you can store. If you store more than required, it might spoil and you end up losing. And also, if you don't store what is required, you might end up selling and don't have stock. So most time, one of the dilemma the firms have is to ensure that they are in balance, to ensure they don't run out of stock, and also they don't tie their capital in unwanted stock. So they devised a means whereby they can know their stock level, know what is required and what they have to sell. So it takes us to what we call the stock level, right? Firms have devised a means centrally to ensure that there is effective stock control to avoid stock out or tying capital to unwanted stock. The following are the stock levels that can be determined. Following are number one, reorder level. Minimum stock level. Number 3, maximum stock level. And number 4, reorder quantity. Known as economic order quantity. I like to use pictorial illustration because the brain is more sensitive to pictures and videos. Now, if, for instance, now, these are the 4 ways that firms can use scientific method to ensure that, one, they don't run out of stock, like I said, and also they don't tie up their capital on unwanted stock. So they should have a balance. And the first one is what we call reorder level. Reorder level. And let me give you an illustration before I go into that. Now, reorder level is a point in which, when it gets to, the firm should start making requisition to buy. For instance, if you're a seller and you start selling, and you start selling, and it gets to this point, what it means is that you should start making order to purchase another item to replace. The essence is because if it goes beyond this, you might run out of stock. And so that's why the situation whereby you go to a retailer to ask the person, madam, please give me mini indomie. Say you don't finish now. It shouldn't be like that if they are aware of this. Because this reorder level will ensure that when it gets to that level, the trader or that firm should make requisition to buy more to replace, so that you don't lose your customers. Yes. That's the reorder level. Okay? So let me talk about this. I'll still give you another one. Now the minimum stock level should be below the reorder level. This means that this is the minimum that your item should get to. Even at the point, if it exceeds and come down here, it means this is an emergency point. You should not allow to even get to. It is the minimum. It means at this point, if you are selling, it means what is remaining is just one. It means once they purchase it, you don't have any other item again. So that is the minimum stock level. That's the minimum level a stock should get to. You should not allow it, no trader or firm should allow their stock to get to this point. If not, they will run out of stock. No other item will be remaining. What they leave here is for period of emergency. Probably there is nothing. There's what we call base stock. Probably there is nothing. You now lay hand on it. For instance, if you notice, probably in the village, you'll notice that some of our parents, their farm, there's a particular product, if it is corn, that they will go and put inside the hut and leave it there. Some of them are not going to do it. You know what I'm saying? They will not eat that one. Because that is what they will use for what? So that, in that situation, is that minimum. There is no harm, even if everybody is dying of hunger there, they will not touch that one. It is only in rare cases, emergency, that is what it is. That is minimum. Now, maximum stock level. And this is the point whereby your stock should not exceed. Because if it exceeds that, it means that you are not tying your capital. Why? Because your demand is not as much as expected. So your stock should be around this point or below. It should not exceed. If it exceeds, it means one, you might be having excess of holding costs or storage costs, or some of the items might even get spoiled. So this is a point whereby if it exceeds it, you might be tying your capital in unwanted stock. Okay? So that is what the maximum stock level. It should not exceed. Now, why the reorder quantity, which is also known as economic order quantity, is that quantity you want to reorder. For instance, now, if you're selling, probably you're selling, and it gets to this point. Now, that quantity you are now reordering is what we call reorder quantity. For instance, you will now say, okay, bring me 50,000 cartons of mini-me chin-chin. That is the reorder quantity. Do you understand? That's the point. So that is the fourth aspect of the method that we use. The reorder level is the point at which it is necessary to prepare purchase requisition for fresh supply of material. The level should be higher than the minimum stock level, but lower than the maximum stock level. The other level is given as that's the formula. Another level is given as a maximum consumption times the maximum reorder period. So where our RL is reorder level, MC is maximum consumption and maximum reorder period. So like I said, the reorder level is that point in which once it gets to, you make requisition, okay, for purchase. Now there are many things that firms consider before they ensure that this level should be our reorder level. One of the things they consider is the lead time. It's what we call lead time. Lead time is the time between when a purchase is made and when the item comes to the company. The time between when a purchase is made and when the item has come to the company. And also possible delay. They will take this into cognizance, okay? To ensure that, because now look up, like I said, this is reorder level, this is the minimum. So within this time, when they've made purchase, you know, they'll keep selling. They'll keep selling. So they consider that while they are still selling, this one is already back. So they will not ensure that it gets to this point, which is the minimum. Okay? So that is the formula. I'm going to use that to solve. So that is the first one. Now let's see the second one, the minimum stock level. The minimum stock level, kind of buffer stock. I said that before, buffer or base stock. Below which the stock should not be expected to fall. This buffer stock is used mostly in times of emergency. Minimum stock level is given as so the minimum stock level is given as the reorder level minus normal consumption times the normal reorder period. The normal consumption can also be what we call average, that is on the normal circumstances. What is the consumption times also on the normal circumstances, what is the reorder period? So reorder level minus normal consumption times normal reorder period give us the minimum stock level. The third one, where are you? The third one, the maximum stock level. The maximum stock level is a level which stock should not be allowed to exceed. If stock exceeds this level, it will result to tying capital, working capital, actually, tying working capital to unwanted inventory. So, like we said, the maximum stock level. So we said this is the highest point, the peak, the zenith in which you should have a stock. Now, for instance, what it means is that if you are a trader and you're selling, and you notice that probably in this your vicinity, you don't sell much, and the maximum you should get is, let's say, 2 cartons, or 2 cartons of Indomie. That's the maximum you should get because people don't patronize you much. And this is maximum. And because they dash you money and you want to purchase more, you went and bought like 100 cartons. You see, you've exceeded your maximum. And what will happen, because this item is I believe a perishable item, one, there might be spoilage, deterioration of the goods. Okay? And also storage costs might also be high. So that is the maximum level. The maximum stock level is given us the maximum.
That's everyone did that.
Yeah. Fourth one, reorder quantity. So this is the maximum stock level, the reorder level minus minimum consumption times minimum reorder period plus reorder quantity.
Yes, sir.
Let's see the fourth one. Reorder quantity, which is also known as economic order quantity. Should in case you see the use interchangeably, they mean the same thing. Right. Reorder quantity, which is also known as economic order quantity, EOQ. So this is also known as what? Economic order quantity, EOQ. And it refers to the quantity to be reordered under normal conditions. Quantity to be reordered under normal conditions. It is given as so square root of 2DCO divided by 3 CS. D is the demand for the units of material per annum. Per annum. Per annum means 1 year. CO is the cost of order. The cost, what it will cost you to order. P is the price of the material. YCS is the cost of the storage. So you take this into cognizance to determine what your quantity to be ordered will be. Okay? Under normal circumstances. Now let's take this fifth one also, that is not part of this. Stock turnover. Stock turnover. And the stock turnover is also known as the rate of stock turnover. Are you there? The stock turnover is also known as what? The rate of stock turnover. And it means the number of times the materials are used. This is used to detect materials which are used frequently and the ones that are not used frequently. The stock turnover is given as, it has 3 formulas. stock turnover looks at the number of times a particular stock or material is being used. If it is for a trader, it means the number of times go to the market to restock. Okay? Now you know, different materials would not have the same stock turnover. For instance, somebody is selling land, and somebody is selling rice. They will not have, these will have high stock turnover because people consume this more. Okay. So, and the value for stock turnover is not in naira, is not in monetary value, it is in times or days. Okay, by looking at the day. So the first formula is cost of materials used divided by average stock. The average stock is looking at the opening stock plus closing stock divided by 2. Now this is a situation whereby if you're giving average stock, then you use this formula. If you're giving opening plus closing stock, then you use this. Now the second one is cost of materials used divided by half maximum stock level plus minimum stock level. So a question whereby you're giving the maximum and the minimum stock level, add both of them and you divide by 2. It is still the same thing. The third one also, the materials consumed, then constant. Minimum stock level plus 1/2 the other stock. So that's the same formula. Now let's see a question. Yes, you are right by the same answer. That's when in some questions they might not give you, they might not give opening and closing stock, they might give minimum stock level and maximum. And in some questions they might just give minimum and the other quantity. So you use those items in different. Are you there? Now let's see a question. The following information relates to the activities of ABC company from January to December 2001. Are you there? You're required to calculate. Are you there? The stock turnover. You're required to calculate the stock turnover given opening stock, purchases, closing stock, now, they asked us to solve the stock turnover. Okay. Now, if you notice, we have opening and closing stock here. So it means in this situation now you can't use this or use this. So use this. Okay. So now they said we should find the stock turnover. This is the rate of stock turnover. Same thing. Now, remember the formula: cost of material used divided by what? Average stock. Now you ask yourself, now how do we get cost of material used? It's not given here. How do we get it? If you remember in SSC 101, now this is why learning is a chain. You don't drop it. Now we are going to derive cost of material used given this. Now remember our trading profit and loss account and also the manufacturing account. Now we have opening stock. Opening stock is 9,000, right? Now if you add purchases, you have 102,000. 102 plus 9,000 plus what? 111, right? Okay. Now since there is no carriage inward and there is no return outward, this becomes our what? Cost of what? Cost of materials available for use. Then if you now less closing stock, which is what? 15,000. So 111 minus 15,000 gives us what? 11 minus 5, 6. That's what? 96,000. So this becomes our cost of material. 96,000. So you might not be giving this direct. So ensure you have a revision on it on trading portfolios account. So that's cost of materials used. Cost of goods sold. Maybe cost of goods sold or cost of materials. 96,000. Now I want to solve this now. So this becomes 96,000, right? Divided by average stock. Now remember, I said average stock is opening stock plus what? Closing stock divided by 2. Abi? So if we do that, this opening stock is how much? 9,000 plus closing stock is how much? 15,000 and divided by 2. So we now have 96,000 divided by 9,000 plus 15,000 is what? 24 divided by 2 gives us what? 12,000. So 96,000 divided by 12,000 gives us what? 8, right? 8. So 8 times. So we're talking about the rate. So it means because the stock they go to the market 8 times in a year. 8 times. 8 times in a year. So that is how to solve the rate of stock. Giving, opening, and closing stock. Now let's see the second example. Right. More information relates to materials. Number 888. For the year 2001. The year 2001. Can I clean this back? Yeah. The stock turnover. The first one, the maximum stock level.
Let's go for you. 2001.
6,000. Minimum stock level. 2,000. Yeah. So we have solution. Yeah. Now, if you notice, we have maximum stock level, minimum material content. Now, it is even correlated to this first one. You can even remember. This is still average. This is still average because we are dividing by 2. Okay. So, material consumed here, our rate of stock turnover, we said is the material consumed or used divided by half maximum stock level plus minimum stock level. Okay? So if we do that, material consumed is how many quantity? 16. So we have 1 over 2. What's the maximum stock level? Plus what's the minimum? 2,000, right? So if we continue, we have 16,000 divided by 1 over 2, 6,000 plus 2,000. 8,000. So 8,000 divided by 2 gives us what?
4,000.
Huh? Now remember, whenever you have a value at the side, it's multiplying the numerator. Right? So 1 times 8,000 gives us what? 8,000. 8,000 divided by 2 is what? 4,000. So now 16,000 divided by 4,000. 4. So it means 4 times. So the rate of stock turnover there is what? 4 times. Are you confused?
So you mean that the cost of material is the same thing as material consumed?
Yes. It's what is being used now. Cost of material use, cost of material consumed. That's now let's say a comprehensive example. Example that has to do with our reorder level of the maximum stock level, minimum stock level, where that quantity. And remember, this example was to show you how to solve stock turnover. Okay. And let's see, right? The following data are available with respect of material 555. The following data are available in respect of material 555. Estimated maximum consumption. Estimated maximum consumption. Okay. Now, the question said the following data are available in respect of material 555. Now we have estimated maximum consumption 14,000 units per month. Estimated minimum consumption we have 3,000 units per month. Estimated average consumption we have 12,000 units per month. Then we have estimated yearly consumption 144,000. Lead time from suppliers is as follows. Remember, I told you what lead time means. Maximum is 3 months. That is the duration of when they make order and when it comes to the company. I said maximum is 3 months, minimum is 1 month. Normal circumstance. They might either use normal or average. It's the same thing. It's 2 months. Okay? The price per unit of material is 0.7. Storage cost is 20% of stock value. Ordering cost is 5 naira per order. Now require calculate reorder quantity, reorder level, maximum stock level, minimum stock level, average cost, and stock turnover. Now please, now look up. Don't look at how cumbersome this is. Now remember, we gave the formula. Most of the items, just pick. Once you are choosing a particular item, pick what is related to what you're solving. That is what you do. Don't look at how it is. So we want to solve this now. Now we have the solution. Okay. Now the first one is the other quantity. So we have 2DCO PCS. Now remember we said our D is the demand. I was saying where D now estimated yearly consumption is the demand. Remember this is money. This is per annum. That's why they said yearly. So this is 144,000. And CO, remember we said is the cost of ordering. Yeah. Now we have ordering cost as how much? 5 naira per order. So that's 5. Then we have P, the price. The price per unit of material is 0.10, right? YCS is the cost of what? Storage. And it says storage cost is 20%, which is 0.20. That's 20% is 2100, which is 0.20. So it doesn't have to substitute. Are you there? You are lost. I'm going to stop up now.
It was not here in the beginning, so it's fine.
It was nowhere.
That's okay. Now we said this is the formula for reorder quantity, which is square root of 2DCO divided by PCS. You're just coming back, don't get stuff from those that she gave that formula. Now what we say D is what? The demand, right? Okay. YCO is the cost of what? Ordering. And they gave us ordering cost as what? 5 naira per order. Then P is the price per unit of material. YCS is the cost of storage, which is what? 20%. Okay? So you just want to substitute that. So I'll have 2 times our D is what? 144 times 5 divided by our P is what? 0.10, right? Times And CX is what? 0.20. Somebody please help me. 2 times 144,000 times 5. One what? This is actual value for me. Oh. Yes?
1,440,000.
Like this?
Yeah.
Okay. Divided by. So we got this by multiplying this to 1, 2, 3, right? Now divide by this times this gives us what?
0.02.
0.02. So you divide. This divide by this.
72 million.
72 million like this?
Yeah.
Okay. Now help me the square root. Square root of this all the way up. 8485.28. Of that?
13.
So 8485.28 units. So it means the quantity they will reorder when it gets to a certain level. I explained all this. I said this reorder quantity is the actual quantity that will be reordered when the stock gets to a particular level. So this is the quantity that will be reordered. 8485.
And we
Approximation.
And you can approximate to. Is this all the value?
yes, that's like
No, this is not all the value.
Huh? And you can leave to 2 decimal places.
And this one.
If you don't know what is 2 decimal places, then that's not important. So that is the first one, reorder quantity.
Point out as
Then the second one,
B.
the second one B is what? Reorder level. What's the formula?
MC times MRB. Maximum consumption times maximum reorder period.
Maximum consumption.
Times maximum reorder period.
So the reorder level is maximum consumption times maximum what? Reorder period. So we have maximum consumption. And you come here, you said estimated maximum consumption, right?
Yeah, 14,000.
That's 14,000. We have 14,000 times the maximum reorder period. 3. Maximum, the lead time of supplier, maximum reorder period. 3 more. So 14,000 is gives us what?
42,000.
42,000. Now what it means is that when it gets to 42,000, they should start making requests to purchase. That's the level. When it gets to 42,000, they should start making requests to purchase this quantity.
But that's the answer.
Yeah, 42,000.
42,000 units.
That's the other level. Okay. The next one.
Maximum stock loss.
Maximum stock level, right?
Yes.
What's the formula? The other level minus. Can I clean this part?
Yes.
Consumption minimum reorder period plus reorder quantity
The other level
minus
minus.
brackets minimum consumption times
MRP.
minimum reorder period quantity.
Plus reorder quantity. Okay. So you see why you have to get your reorder quantity first, because if you don't get it, you will not substitute it.
Okay.
So we have reorder level. Reorder level is
42,000.
42,000.
Yeah.
I see it's not here. Oh. Let me look here.
Yeah.
We have stuff for
Reorder
the
level is 42,000 units.
42,000 minus minimum consumption period. Minimum
Consumption period.
period.
One
One more.
Minimum consumption, sorry.
3,000.
3,000
The other one is one.
times the minimum consumption period is what?
One.
1 plus our reorder quantity.
84.
Point what?
84.
2.8. Right? Okay? So we now have 42,000 minus 3,000 minus 1 is what?
3,000.
3,000 plus 8485.28. So we'll have 2,000 minus this is what?
39,000.
39,000. Now if we add it to 8485.28, what do we have?
47,485.28.
47,485.28. Now this is the correct. Maximum stock level is supposed to be higher than the reorder level. Remember when I explained this? I put maximum here, reorder level, then minimum. The maximum stock level is supposed to have higher quantity, meaning that it should not exceed this. Then with the reorder level is supposed to be the next. So what you do is for the 2,000 or the value, the reorder level minus this value before you add this.
Bracket first.
When you treat items in the bracket first. Okay. So the fourth one is what?
Minimum stock.
Minimum stock.
You see. Then this is what? Minimum stock level. So what's the formula?
Reorder level minus
Reorder level
brackets. Normal consumption.
Normal consumption
Times normal reorder period.
So what's our reorder level? 42,000, right? Minus. Our normal consumption is what? Remember I said normal is the same thing as what?
Average.
Okay, thank you. That's 12,000.
12K.
Times.
Normal
Normal reorder period is what?
2 months.
2 more. So we now have 42,000 minus 12,000 times 2 is what? 24, right? 42 minus 24.
David.
Huh?
18,000.
18,000. Now what it means is that the minimum stock level is 18,000. That means you should not allow it to get, when it gets to this point, it means it's emergency. It's emergency. What the next one is what?
Average stock.
Average what?
Stock.
Average stock.
You got this one?
Now you can do it now.
No. Time is still there.
We have done, we did average stock while solving for rate of stock turnover. I say no.
Yes, you don't get it that time.
So average stock we can use maximum and minimum stock level and divide by 2. Since we are not giving opening and closing stock. Remember I told you the two formulas in the rate of stock turnover, the first and the second. I was explaining, I said opening stock plus closing stock divided by 2 is still give you the same value as maximum and minimum stock level divided by 2.
Yes.
The same formula there.
Maximum stock level.
Because yeah, we are not giving opening and closing stock. So we are going to use the minimum and maximum stock level. So if we have our average stock level, average stock level equals maximum stock level plus minimum stock level divided by 2. With the same thing as opening stock plus closing stock divided by 2.
Yes.
If we are giving opening stock.
So we are not adding that cost of material.
This is not rate of stock turnover.
This one will be stock
This is
turnover.
not rate of stock
Now
turnover.
to find the average.
Inside that rate of stock turnover, there is you see average there.
Yeah.
So maximum, what's the maximum?
47,485.28.
47,485.28 plus minimum is what?
18,000.
18,000 divided by
65,485.28.
65,485.28 divided by 2. What do we have?
32742.64.
32742.64. Like this?
Not like that.
So the average stock level is 32742.1. Then the last one is what?
Stock turnover.
Stock turnover. You have done this now.
But you can do it, sir. Yes, sir, you can do it. Time there.
So we have stock turnover. So we have materials used
closing.
over the average stock or average stock level. So materials used, we use the estimated annual,
Yes.
which is 141,000 divided by average stock. We have calculated it here.
Yes.
So in case of exam condition, you might just take this. Right? So this is average stock. This is 22,742.
I am going to
You understand what I did here?
We use the yearly consumption.
as materials.
Do you understand what I did here?
Yes,
Yes.
just for
Now the average will be.
So help me please. This divided by this, what do we have?
4.3979.
4.39.
Seven,
So I can approximate to 4.4 times. Remember, there's no the basis in which each of this formula will be. This will not be in unit. It's not unit. I've said it before. It's rate. So 4.4 times the rate, the turnover. Just check that. Check the title. You will know. Rather quantity is unit, level is unit, stock, these are units, these are units. But this one, turnover is rate, looking at stars. Okay. So that's where we go for today. The next task, we'll continue from still this, then we'll look at how firms value their stock, different prices. Well, we look at FIFO, LIFO, HIFO, people, other prices.